All right. Good morning, everybody. A quick update on the bots. I think we've got most of the bugs worked out. Apparently, the Trading Tick web hooks take an extra day, I guess, but they should be active. So as you're on the site this morning, you might see these start to light up with news and with their intended purpose. Again, I'll be coming out with videos to explain these to people, but if you want to get ahead of me, there are 4 bots that we're pretty much using right now, and each of them has their own website. So if you were just to go to Google and Google the bot's name, so one of the bots is Alpha Bot, one of them is Trading Ticks, another one is Whale Stream, and Chatter Quant. There's also Option Fam Bot, and each one of those, if you look along the side, you'll often see their names, right? If you go, say, into a particular channel and you look at Trading Flow, right? So Trading Ticks and Chatter Quant, and it's got their names there in it, right? Or here, Options Fam Bot, and then you could just go to Google and you could Google it. But I will be coming out with a video to kind of walk people through how these things work and how you can use them. Now, I did mention Whale Flow, but that's not necessarily a bot. We just have a channel where they have their alerts landing for us, but they're more of an application. You would go to their website and actually use their tool. Either way, it's they're landing here in the unusual options, right? So we have a bot bringing Whale Stream's unusual splits and unusual sweeps into this channel. But if you go to Whale Stream, you won't find necessarily a Discord bot, right? It would be more of that you would find them, and then you would integrate a bot that they have. Let's go ahead and get started. One of the first things that we do every morning is we check the economic events out there, right? Like what's going on out there. We want to know what's on the agenda for today. Well, I'm in the bot commands corner. Exclamation point, calendar. Here's our economic events for today. Nice and clean, organized. Make no mistake about it. Never trust that this is everything. And it has nothing to do with this one single bot or one particular bot on Discord. Just like I've mentioned before, if you go to FX Street, take a look at Thinkorswim, see if they both have the same information. If you go to Finance Juice, also check out another place. Never trust that one spot has all of the information. But this is a nice short list. We can see that there are FOMC members that are going to be speaking. And remember, they're going to be going into blackout mode soon. They always do that before they go and we have a new FOMC announcement, right? They have that blackout period. So they're going to be trying to get as much face time in the media and go out there chipping their teeth as much as possible. And well, we got to anticipate that. All right, so what else could we do while we're still right here in this spot? And it's a kind of a part of the morning briefing is we want to check the president's schedule. Now, during COVID, this was something that I did constantly because the White House kept coming out with these afternoon, and not even always in the afternoon, it was sometimes in the middle of the day, that they would have these White House briefings, and the things that they were saying was inflammatory enough to move the market. So we always were monitoring the president's schedule. Now it's not as bad now as it was then, but it still is useful to know. So exclamation point, president, no data, no problem, right? All we did there is checked his schedule and see if there was anything that he was scheduled for today that we would want to know about. And usually, like, suppose he was going to give an announcement about the trade agreement, some trade agreement, I don't care, whatever it is. It would be, a scheduled known thing, and it would have shown up here. I think a lot of times when you run this command, you're not going to get any data, and that's fine because we're not trying to prove a negative, right? Either there is something there today or there's not. There's not, you move on. So two really useful examples of the bot, how we can start our morning with it. But now we're going to kind of land back into our normal routine. Let's take a look at, say, financial juice. This is where we got the European wrap, and we can double check the economic events that we were just looking at in the Discord. We can check them against this list here. You can see Bank of England has a speaker at 1 o'clock today. Barkin is speaking at 12:30. We've got these additional auctions, and these things, I mean, they're my go-to, but today we got the 10-year, right? And this is some of the auctions we kind of just shrug off like, yeah, maybe it's not going to be very impactful, but you know, there are a few that I really lean into, and the 10-year is one of them. So big day today in the options, or in the auctions market. Keep your eye on it through the lunchtime. We're going to be looking for a significant change event, right? We don't want the wishy-washy kind of lazy move in the market. We don't want that. We're looking for a sustained, massive, absolute shift in sentiment, right? It's one of those that you will see it. It's not subtle. It's not sneaky. It's not going to slowly grind into a different position. We're looking for a sharp, immediate shift in the pace of the tape. You want to see orders flow coming through, and tick, trend, UVol, DVol, everything just light up and start moving. That's what we're looking for. And if we don't get it, it's fine. It's not a big deal. But we want to be prepared for it, because on a day like this and with these additional auctions, we absolutely have the capacity to see that today. These auctions, they are a very large part of what my day entails, right? I focus on them constantly. I heard more talk about the yield curve this morning. Apparently it is inverting more and widening out through the different time frames. If you are unfamiliar with contango and then backwardation, consider it from the logic of what a normal curve would look like. So usually where you have something with price and something with time, things closer in time tend to be cheaper than things that are farther away, because things farther away could have drought, famine, hurricanes, right? But there's all these things, that these unknown things in the future that could affect the forward future price of something. And so those forward future prices, generally speaking, are higher. This is contango. This is a natural state of affairs. When this starts to go the other way around, when things in the front are more expensive or more higher price than things that are farther out in time, this is when we are opposite of normal, and this is backwardation. So when we talk about the 210 curve, you got your 2-year, and then you have your 10-year, and it's supposed to be in this nice linear fashion, things closer in cheaper than things farther out. But when the 2-year is more elevated in value or cost than the 10-year, then we are in backwardation. So this is an inverted yield curve, right? That, I guess, talking about backwardation on the news is probably a little bit too much in the morning, right? Before people's had their coffee. So they present it from this inverted yield curve kind of concept. Well, this is a very steep little hand-drawn image. But if we were to think about that curve across the board, call it flattening out. You've got your 2, your 10, your 30. There's all these different bond notes. That curve, if it's widening out, flattening out, that'd be what they were talking about this morning. So also consider it from the idea that you could have a 2 relatively high, and then say it goes up to a 5 and then down to a 10, and then up to say the 30. So, it can be all kinds of wobbly and disjointed, and it's not always just as simple as this nice, neat little curve. And those 10 years are on the table today. It's where we've got our additional auctions, the US 10-year. All right. So pay attention to your lunchtime and be considering where that reversal is going to come from, right? And what that reversal is going to look like. And again, we're not looking for subtle. We're not looking for a simple shift in sentiment. I had someone ask about the bots. They said they can't see it. If you're a monthly member, you can't see it. If you want to use the bots, you have to upgrade. Boom, boom, boom. All right, so here on Thinkorswim, I always like to go to this channel because if you're going to go back and use these videos for your intraday homework or intraday review, these videos really help out with that, right? When you take the morning briefing and you go to that particular day in that particular time, you can check within the first 5 or 10 minutes of the video and see this screen where we talk about what was on the agenda that day. And I've been doing these morning briefings in the public for over a year now. I was doing them before that with my private coaching community, but as a part of the work that we would do, say, working on our trend day material, a lot of times it was going back and looking at a particular day and saying, all right, well, what happened this day? Right? Was there economic news that caused this reversal, for an example? Was there something during the lunchtime that helped with this move that we saw? And we could go back to the morning briefing for that day and then look at this screen, right? It would be within the first 5 or 10 minutes of that morning briefing video. So these morning briefings are not just for right this moment, right? They can be used for a part of your deeper dive into a particular strategy, concept, trade logic. They will help you review the intraday price action when you're going back in time and looking at what had happened. Something to consider. All right, so what do we have for today? We have a really nice liquidation break. What is wrong with my my drawing tool? Maybe it's a union drawing tool and it only works when it wants to and it takes breaks frequently. Are you ready to work now? All right. So nice liquidation break last night. We did stabilize afterwards, been building a little bit of a megaphone pattern. While we are outside of yesterday's price action, we haven't really expanded massively, right? We're basically trying to hold that line, and we've almost got a Busby off the bottom of yesterday's price. Almost. There's always 3 expectations for the day: that we can stay inside the range, or that we expand to the downside, or we expand to the outside, to the upside. Well, we're already outside of yesterday's range, so we can take that one off the table, except if we come back inside of yesterday's range. So at the moment, we're down 0.5%. If we were to focus on yesterday's range, then it would be from the Globex of Sunday night to all of yesterday, including the lowest point of yesterday. And then we just carry that forward. into today's price. Well, that didn't really help out. Do it again. Do it. There you go. So that would be yesterday's price action. If we were going to maintain the range, we could now include our own Globex price action from this morning. And that would help kind of break it down into quadrants, but also have a clear understanding of what the range is for the day. There is plenty of price action range here, right? We've got almost a 100-point range from 3,900 down to basically 3,820. So a nice 80-point area where price could move around. That's plenty of room. And you may see very clean, clear, amazing trend within that, but it would still be a range day. And I know that tends to confuse some of the newer traders. How can you call it a range day? I clearly see price action trending inside of that. Sure. Absolutely. You can have candles printing in a nice, beautiful trend, but it would still be inside of this contained range, yesterday's range. But if you break it down into quadrants, that can really help out. Things like the institutional pivot points or universal pivot points, I think is the word we're trying to use more frequently, because institutional pivots just seem to confuse everybody. So let's try universal pivot points. Yesterday's low, yesterday's high, the Globex open, the RTH open, and the Globex high, and the Globex low. Those additional pivot points would give you benchmarks and goalposts, right? If we get to this one, we start looking at the next one. Will this one hold? Will we break through it? Are we going to reject there and go back where we came from? Right? It gives you a way to target and identify what you think we're going to do, and then come up with a trade plan for how we're going to do it. There's still a very large range, and we are down 0.5%. We've got an ADR of 2.9, and we've only moved 0.49. 2.49 minus the 4.9. We've still got a 2% move that we could go to the downside, and it would not even be considered unusual or outsized or extreme. So we're looking at 38.14. Now, I gotta say, if you get that close to the COG line, which is 38.11, you're probably going to go to the COG line, right? It's called a center of gravity for a reason, the gravity word, right? So it says 38.14. I'd say 38.11. Then there's the roundy at 3,800. And then a full ADR at 37.66 for the downside move. If we're going to make that move, one of the first pivots that we're going to be focused on is the current Globex low. If we challenge that and then break that, we'll start focusing on 38.14, 38.11, 3,800, 37.66. Now, between 3,800 and 37.66 is a really wide open space. If we could fill that with some institutional pivot points, it would be much better, right? So we want to widen the scope of our perspective a little bit, maybe look at a little bit more of a time frame. When we do that, if we can still also identify institutional pivot points, that'd be great, right? Open, high, low, close. These can be daily open, high, low, close, but they can also be weekly. So last week's open, high, low, close, for an example. Even a monthly pivot with the open, high, low, close. Those still have context, still have value. One of the easiest ways to get that done, marking out those open, high, low, close, just come out to the daily chart. Right? You see how simple it would be if you're hanging out on the daily chart for a few minutes, that you can absolutely just lay out these various pivot points. And it would be marking out pivot points from back here. This is really what we would be focused on, because if we break this low today, the pivot points that we're going to be using will be from back here. That short holiday week, right? Because it was 4th of July and all that good yummy stuff. And just like that, we have some additional pivot points. We have a few more things to focus on should we break that range or that level that we were talking about, right? Because we had a pretty wide open gap here with not a lot of pivot points in between that. We were able to add at least one right around that 3780 area. This 3801, yeah, it's close enough to the 3800. We can go ahead and take that one off the table. 3808, I mean, it's really close to the 3811. You got 14, 11, and then 8. You know, you start to pile on too many of those, they all just start to overlap. It becomes an ugly, confusing mess. So if there was too many lines lined up on top of each other, it's often better to just draw yourself a little bit of a rectangle, right? And encompass, say, 2 or 3 of those lines all at once. When we're talking about drawing out lines, I always like to remind people, don't imagine that you're using a sharpened pencil. Instead, imagine that you're using a fat, dull crayon, right? Because we're not talking about putting a particular line in the sand that has to be exactly perfectly matched to a particular penny or tick. Instead, they're more of a zone or a range or a quadrant. All right, so we're looking at a 10-day, 30-minute chart here. You can see that the volume resistance held through that 3900, 3920 area. We are back inside of the volume profile now. We are literally into the point of control, and we're more to the upside of the box than the downside of the box. So the expectation would be that we continue to make our move to the bottom of the box, only because if you're at the low, you expect to go to the high of the box. And when you're at the high of the box, you expect to go to the low of the box. I don't like that just by default, because it implies that we have to be bearish just because we're at the top of the box. Well, that doesn't really make any sense, right? But that's the way that it's presented, right? That when you're at the top, you expect to go down. When you're at the bottom, you expect to go up. So we say it, but let's just kind of think it through a little bit. There's nothing that says that this market has to go bearish just because we were at the top of the box. And in fact, the one thing that is the hardest to try to help people understand about this box is that the box will move with price. Price is not the only thing moving here. So every 30 minutes, one of these back candles are going to drop off, and these lines will all be redrawn into a new position. Now, sure, it may only move a few ticks, and since it's not moving very fast, you don't visually see it, but the box is moving as much as price is, right? So when we say that price has to go to the bottom of the box, it doesn't necessarily mean that price is going to go to the bottom of the box. The box may come up to price. All price has to do is literally just stay where it is, and eventually the value area low will get a lot closer to price. So to answer the person's question who had asked me the other day about this, when we're at the top of the box, we go down. When we're at the bottom of the box, we go up. No, don't just inherently turn bearish and try to short this market because we're at the top of the box, right? Don't do that. If we were to try to make a move back up this morning towards the value area high, note that there is a significant level of volume around the 3860 area, and we are resting on the last consistent area of volume support, 3838, 3828, right in here. If we break this, there's really nothing there to catch us until around 3780. So it's very shallow around that 3800. It's really important to point that out. Let me demonstrate why it's really important to point that out. Remember when we were out here on this chart, and I said that the 3800 is a pivot point and that it's a round number and we should mark it and anticipate price reacting at that level. We want to be able to back that up, right? I make a general statement that says 3800 is a round number. We've all heard the phrase 38 or round numbers are places where we expect to see price respond and react to a market. But we want to be able to back it up, not just vaguely imply that 3800 is a good spot. Well, when we went to back it up, there was nothing there to back it up. So we don't want to use 3800 flat just because it was a round number, because the volume profile shows there's no pivot there. I did delete a pivot off of the yearly chart, however, that was at like 3801. So because of that pivot, we would still have 3,800 marked. We just wouldn't be able to validate it with volume, which is fine. So this point of control is no longer an untouched point of control, but let's look at how price reacted to it last night and why we carry these lines forward. So we had that break, that nice liquidation break last night. The market kept working its way down. And that first touch play, we hit it, we bounced off of it. Now, sure, we eventually did break through it, but first touch play, price responded at that point of control. The point of control that we carried from last Wednesday. These aren't support, they're not resistance, they're just areas where we anticipate a reaction in price. Call them areas of interest, right? Or areas of concern, use whatever word fits there for you. And that's exactly what we got out of it, right? Price responded at that level. It reacted there multiple times through the night. It's no longer a value now. We've already crisscrossed through it multiple times. We've wiped that off, so it's done. But we do have a new one now from yesterday. Well, no, I guess not. We've already passed through it. That's too bad. So we had one, and then we opened up, we went to the upside, and then we came back down and broke through it. So we would have carried that one forward, but we've already taken that one out too. We still have one from Friday. So there you go. 39.0556, which of course there's no 56 when you're dealing with futures, right? We just knocked the 6 off. 39.05 and 2 ticks. It's a untouched point of control to the upside. We definitely want to carry this one forward every day until we finally do take it out. We had some concerning moves this morning. This liquidation break in oil is very concerning. We are back down below the $100 line, which is good. Don't get me wrong. I mean, you're going to feel it at the pumps when we keep getting higher and higher above $100. So yeah, but it was the pace and the scope and the speed of the move that is concerning. Now we're not outside of our liquidation. Or we're not outside of our expected move. So it hasn't gone too far, too fast. But it is a concern. It does need to stabilize to kind of hold the line and not continue to make $3 moves, right? So we want to see that calm down a little bit. If we try to pair that move with the futures market, say the ES and the NASDAQ, and just try to kind of line up the mouse here. The markets responded after the fact, not with it at the same time. And this is an important distinction between these two things. Oil made the move, and not long after that, the market made the move, right? So the S&P and the NASDAQ responded afterwards. Now, I don't know what made the market on the oil here move. I see EPOC forecasts world oil demand will grow by 2.7 million barrels in 2023, and that was the monthly report. And then there was some OPEC reports this morning, global economic growth from OPEC, just a whole laundry list of these different things on financial juice this morning. So it's very likely that that's where this impact came from. There's got to be more to the story. Keep your eye on energy markets through the day and energy news as well, right? Anything that can help you grasp better about what's going on and how we can use that going forward. Remember that they've been using energy multiple times this year to suppress the market. So we absolutely want to know what they're doing over there. At the same time, we had also a significant move in the dollar. And I said same time, but I tried to catch myself when I said it. At some point this morning, too, we also had a significant move in the dollar. We're actually all the way up to 8.5 at one point last night. And we are now back up to around 8.25. We did get below 8 for a little bit in that liquidation break, kind of trying to stabilize. Keep in mind when it comes to these liquidation breaks or these significant single candle large print, big sweeping moves like this, that very often it's like a, well, the mental visual that I always have is the bungee jumper, right? The guy climbs up on the bridge, jumps off of it, and he falls and falls and falls and falls, and the bungee is stretching more and more and more, and then it yanks and whips him back in the other direction with velocity. Very much like this move right here. And you'll see that a lot, right? It doesn't always happen. Obviously, we had a liquidation break last night in the ES, and we didn't immediately whip back in the other direction, but a lot of times we do. Consider it from the idea that there's a liquidity vacuum that is created here, and the markets don't like having a empty space like that. I would call it a gap, but every time I do, someone says it wasn't a gap. I can see candles were printed there. Yes, I get it. There's candles there, but think about it from the concept that there actually is a gap, that the market gapped down from this location to that location and is now trying to fill the gap. And then once that gap is filled, it will continue to do whatever the regular pressure is upon that market. If it's going to continue to go to the downside, or if it was a singularity event and it's done now and it's going to come back inside of its own price action. I don't know, because I don't know what dropped the dollar last night. I don't know what dropped oil other than the news on the OPEC. I don't know what had dropped this liquidation break last night, because after 5:30 I go spend time with the family. So the why does matter, right? The why counts. But on the other side of it, just keep in mind that when you do get these significant drop downs like this, you very often get a market that whips back in the other direction to fill the void of the liquidity vacuum. Bitcoin struggling to get back above VWAP. Gold is back above VWAP, really fighting against the bottom of that 4-period daily moving average. The bonds are back above the 4-period and expanding nicely. These are good, clean expansions, right? Maybe not that kill zone move. The kill zone happens to be between 2 and 4 in the morning, and we had a very large move there in the bonds, but then it's stabilized since then. It's calmed down, and that's what we want to see. Nice, clean, consistent moves, not big, large, sweeping, expansive candles, right? So we want to see the bonds kind of calm down a little bit. We're struggling underneath that 140. If we can maintain below 150 by the week, I think it'd be a good deal. And maybe not dropping lower than, say, 115, 120. So our range is defined. Now, this bond happens to be the 30-year. Keep in mind that we do have the 10-year auction today. So we want to just really keep in mind that we have the 2, the 10, the 30, but we have our own financial markets that we can look at, the KRE, the XLF. We have banks reporting earnings, kicking off earnings this week. Obviously not all of them, but some of the big ones. So finance is going to be a really big deal. Yesterday, when we were trying to call when that break was going to happen in the market, one of the things that we were looking for was the financials, right? And when the financials finally broke to the upside, that's when the market took advantage of the situation and broke with it. It didn't stick, but it didn't have to. All I had to do is move enough for us to get our play. And so here was KRE for an example. We came up off of that low and we failed to get a new high on the day. In fact, we pretty much failed at the high of the 15-minute candle. There was our half-day wedge breakout in technology, and it also failed, but this was the start of it. Nice little break to the upside. It barely made it across the top of that 15 and then just failed out. And when it failed out, yep, so did everything else, which is right around the time that this weighted AD rolled back over and started going to the downside, right? Looking at the SPX here, we were in this tightly wound mess and then finally got that breakout for a nice move all the way back up to the RTH open. These are the things I tend to focus on when we get to the other side of lunch, looking for this opportunity, this expansion. Waited a little longer than I would have anticipated for that one, but it did finally come. And that's the idea, right? I tend to write those out. It's something I'm working on more and more, that we can look at a midday situation and reevaluate the concept of, our day-to-day parameters and our expectations. So here is the 11th. First, laying out what it is that we've had, looking at what is still on the table, laying out the pivot points, pointing out exactly what we would want to see if we expect to have that move in the market. And then when we get the move, being able to actually catch the trade. Just looking a little bit ahead, yeah? Yeah, you like it. All right, so this morning, marked change. Financials down quite a bit. Jets, not much of a print there, although it does show that it's down. FXI, China ETF, it's down, but it's trying to come back up to at least where it closed. Biotech shows that it's down, but really no real prints there. Energy down 2.5. Bitcoin down 3.25. And the rest of these, I really don't think they have enough prints to even count. EEM, emerging markets, we tend to use this for our global perspective. So I want to take a look at Tesla for a moment and check a couple of dark pool prints. The screen we're looking at right now is Whale Stream. And what I want to know is, what was the dark pools from yesterday and how many of them were lining up at a particular spot? Can I use that spot for a short duration support and resistance level? So we're looking at Tesla. We got the dark pools from 7/11/2022. We can see the date here and what price those dark pools came through, 703.03. And if I scroll, I mean, you can see there's a significant level of those, right? There was quite a bit. And these are all from yesterday. So 702.18, 702.60. But we're looking for an aggregate of all of these. First, how much dark pool was there yesterday? And then was there particular levels that I should be focused on? So we come over to this spot right here, market tracker. That's going to take a moment. We come in here, and now we've got our support and resistance levels marked out by those dark pools. So 711.11 is an overhead area of resistance for Tesla. And 700 flat, it says 699, but honestly, if we get that close, I'd lean into the 700 as a dark pool support level. I usually take it a step farther, and I get my drawing tool out and I carry these over to the Thinkorswim, and then I mark those on my Thinkorswim chart. The greatest amount of calls bought in the last 5 days would be the 700 strike. So there's a lot of attention to be put on at the 700. And then on the put side, man, it's really close between 650 and 700. And I'd probably mark them both. If we go back to the calls, 750 is worth marking, and so is 700, right? Because 750 is the next place that has a significant level of call buying. So bring it over to the other side, the sales side. Again, 750 and 700. So it validates what we would already be marking from the buy side. We would now also have confirmation to market. It becomes, we're just confirming our own bias, right? Marking out 750 and 700 would be a really good idea for Tesla, just from the amount of options trading activity, but then also from the dark pool activity. Remember, dark pool is about shares, right? And these are options down here, but they're lining up. They're agreeing with each other. And you can also check farther back, right? And kind of get a better idea of dark pool and public levels. So where's our 750 and 700? Well, we got a 699. And we can see where the 703.03 marked there. But it really looks like 738 would be a number that a spot on Tesla. 738.75 should absolutely be a level we mark, right? Which is nice because we were talking about 700 and 750. And instinctively, I would want to focus on the midpoint between those two, which would be 725. But this would guide me away from doing that and tell me to put my line at 738 rather than 725. So it's nice to know that we can use this kind of background to help validate our support and resistance levels. All right, everything in our sectors list is, well, we got to give this thing a minute, apparently, shaking it around. I was going to say everything looked like it was all red, but it just needed to catch up. Natural gas, bonds, gold. Well, let's not say gold because it's not even up at least 0.5%. That's my benchmark. I need a movement of at least 0.5% before I consider that something is up or down on the morning. So natural gas, nearly 4%, massive gap up, but it's been fading back away from the green line. My green line is a 20. So a nice gap, strong gap up this morning. Couldn't make it through the 20. And even if it does, we still need to be concerned about that $23 spot. It's very likely going to perform some resistance there. And then TLT up almost 1%. got a very beautiful trend line breakover, but we have that 50 period overhead, and that's going to be a considerable amount of resistance. Now, the funny thing is, I don't know, funny probably isn't the word. The interesting part of it is going to be if we don't get through it in the intraday. What we often find when a market comes across, say, a higher time frame moving average, like a 50 or a 200, something like that, if it can't get through there in the middle of the day, once the market closes, it either happens in the after hours or in the pre-market, it'll jump that fence when nobody's looking, right? So kind of watch TLT, see if we can get above that 50. If we do reject off of it, look for the 20 to perhaps provide a little bit of a support. Just keep in mind that these moving averages are almost sideways now, and a sideways moving average is a worthless moving average. We don't look at it for any sort of support or resistance or confluence or bounce or input or nothing, right? Once it turns sideways, it's like used bubble gum. Nobody wants it. All right, SPY down 0.5%. Emerging markets 0.5%. Retail 0.5%. And the rest of them aren't even down enough to be mentioned. For retail, we had a nice rejection off of the 20 yesterday, broke back down below the 10. We got a TRB off of the bottom of this. If we continue to move in the same direction, then getting back down to 58 shouldn't be too much of a problem, right? But the main thing is going to be how are we doing it this morning? The level of resistance to focus on would be $59 flat. Now I was taking a look at Costco, and we had this really nice breakout. And the white line that's on my screen there, that's an anchored VWAP from the start of the year. Costco's coming up very close to that anchored VWAP. It's going to be a real good signal for Costco if we can get back above that VWAP. Think of it from a health-wise point of view, right? Like how healthy is this particular market? Getting it back above the VWAP would signal a lot of health. The fact that it's back above the 10, the 20, the 50, those are all really good things. The idea that we have, say, these higher lows and we now have a higher high is a really good deal. So, you know, we don't have a full set because this didn't give us a higher high from here. So we only have one higher high at the moment. We're looking for a full set. That'd be 2 higher highs and 2 higher lows. But Costco is definitely one worth watching today. Interested in a fade back to around that 490 area. And if it's going to do it, what's it going to look like? So this one's really one on my radar. Looking for perhaps a reasonably decent swing trade time frame, right? More than just a day trade, really, for this one. All right, so here we're looking at Walmart in the short duration. You got this higher low from this base that was built down here. And we did get a higher high than this, but if we were to zoom back out a little bit, we still have all of this resistance around the 128, 129. One thing about Walmart that's bothering me is just the massive amount of indecision that you can see in these candles, these really long wicks on each side. We're back above the 10 and the 20. And we're not outrunning that 10, which is what I like that. I don't like it when a market runs too far away from that 10. We do have the 50 coming up eventually. But we could get a nice breakout play in Walmart sometime this week. So I've been kind of watching it, looking for a new play here. Right now, we're kind of building up an IX10, right? That we're maintaining inside of this range. And the more that we stay in that range, we're just building up more and more and more and more energy. Now, before I leave that channel, pot stocks are doing good this morning. A little bit of a mixed bag, but still some good names in there. Tilray, XXII, SNDL. We got some pretty good traders. I'd keep my eye on pot stocks. You know, on days where, say, the S&P or the NASDAQ isn't offering you an opportunity and you're trying to find some alternative markets to trade, things that aren't moving with the rest of the market, it's a highly correlated market state right now. 80 plus names are doing whatever S&P and NASDAQ are doing. So to get away from that, right, to actually find something that's moving opposite of the market, consider pot stocks and real estate, energy, precious metals, bonds, utilities, right? Try to find things with a negative beta. If you were on Thinkorswim, for an example, and you were to go to the options chain, if we look at Apple, Apple has a fast beta of 1.2. If you look at something like the 20-year bond ETF TLT, it has a negative beta, right? This thing is expected to not move with the S&P. We don't want to say that it's directly going to move inverse, but if you're looking for an uncorrelated market, checking the beta would be just a simple, quick way of doing that. So pot stocks certainly should offer you that opportunity. And take a look at the crypto names. And again, remember, maybe for those who haven't heard me talk about this before, these crypto names came from an index of stocks that were put into a basket for the Smalls Exchange futures crypto product. Well, when we opened that exchange up and we took a look at what was in the list, we copied that list out and made it our own watch list for the crypto names. So you're going to see things like AMD and PayPal, TSM, NVIDIA. Obviously, those aren't coins, right? But they could be heavily vested in blockchain, or they could own a lot of coins. I didn't get the why behind each of these names being in that index. I just know that they are in that index. That's all I needed to know to put them in the list. The EV market this morning. And we're pretty much down. Ride had a nice move, XOS as well. I mean, it's showing some considerable size, but when we bring it out to the chart and we look at it, I mean, that's certainly not reflecting the same information, right? So remember, just always check your platform. Make sure that it's giving you what it's supposed to. Some nice consolidation in Li Auto. This is a gappy thing, though. I don't know that I'd really want to lean into this too much, but still nice moves since early May, right? It's been just building up. It got above that year-to-date VWAP, has been maintaining beautifully above the 10, and only in the last 2 weeks or so has it finally breached that 10 and taken a pause. Well, it's good and healthy to see a market take a pause like this. We don't want to just continue to see it run away like a freight train. The main thing right now is kind of asking if is it going to hold above that 20 or not. So I'd be keeping my eye on this. If it does start to get weak and fail, we've got a nice drop back down that we can play, right? Good 20-point move back down to, well, I don't know about 20, right? But we could certainly perhaps get a good 10-point move back to 27 at least. So, keep an eye on Lee, see if it's going to pan out well. All right, that's the sectors that I really wanted to point out this morning. That's what I got, everybody. Be careful, be safe. Keep your eye out on the videos, right? I'm going to be putting more videos out, so just be looking for them in the chat. We're going to continue to expand on these bots to help you guys out. More examples, more discussions, more follow-up, different ways that you can use it. And we do have webinars planned. I was talking with Whalestream yesterday, and it looks like we have a schedule for the 3rd of August at 1 o'clock. Now, I'll be repeating that more often. You'll hear it probably, pretty frequent between now and then, but we're looking for 1 o'clock in the afternoon, Wednesday, the 3rd of August, where we're going to have a back and forth interview between me and one of the creators of Whalestream. We're going to answer questions that I have, questions that you guys have, and yeah, just do a really great walkthrough. The guy is full on nerd, just like me. I feel like I could sit and drink coffee and talk to this guy forever. I think you guys are really going to like and appreciate what he has to offer. This is the platform that we're going to be talking about during that event. We'll have the affiliate link on the website for that. Obviously, like I used it this morning to discuss those levels in Tesla, there is a lot of ways that we can use a platform like this. And when it is such a simple to use and yet powerful product, man, that's what it's all about, right? Finding opportunities to trade before it's moved so darn far that we feel like we're chasing it at that point, right? We want to get it ahead of the game and have a plan for what we're going to do with it. And this makes that easy to do. So that's it, guys. Have a good one. Be careful, be safe. I'll see you all tomorrow.